Hi everyone and welcome to our interest rate update for April 2015. I'm here with Rob Gilmour. Interesting decision today, Rob. Tell us a bit about it.
Yeah, thanks Aaron. The Reserve Bank decided to leave the cash rate on hold for the second month in a row, and that's 2.25%.
So there was a lot of speculation about a potential decrease this month though, so tell what's behind the decision.
Yeah, that's right. The markets were expecting a cut, but economists were actually divided as to whether the cut would happen this month or next month. And this seems to be reiterated by Governor Stevens' statement when he did say that further cuts may be appropriate in the period ahead. And really what he brought out in that statement was three main things. Employment is still soft. So the unemployment numbers are a concern. Commodity prices have fallen significantly, with iron ore down 25% since the last meeting, as well as the Australian dollar. While it's fallen against the US dollar, it still remains high against a basket of major currencies. So there's a few things still playing on the Reserve Bank's mind.
Yeah, okay. And so there's probably still a strong likelihood of a cut from here. What does this mean more broadly though? I mean, we've spoken before in previous months about the strong property market, about the rising share market. What does this low interest rate environment mean overall for our clients, do you think?
Yeah, look, property market, we all know it's performing extremely well, and look, at best, particularly in Sydney, you'd have to describe valuations as being quite stretched. The share market is also about to hit about 6,000 points, so it's pushing high levels at the moment. Look, the property market is going to be a point of concern for the Reserve Bank, and what they are going to do is work with the regulator in order to curb investment lending. And as investors, I think one would need to be cautious about investing in particular segments of the market.
Yeah, I mean, it's interesting. I'm starting to see some credit policy tightening. It's not that eligibility is a problem, but I've started to see some credit decisions come through with a bit of tightening on policies. Is that something that you think is going to happen a bit more?
Oh, look, absolutely. The banks are getting pressure to curb that lending to that particular segment of the market,
right.
And I think we'll start to see more of that.
Yeah, okay. Look, some pretty good news still for the decision, but what about the flip side? Are there any losers in this?
Yeah, look, that's a good question. Look, with falling interest rates, this is not great for self-funded retirees in Australia who are relying on a return for their investments to support their standard of living. And essentially what this low interest rate environment's doing, it's pushing them into riskier assets in order to preserve their lifestyle, and that's never a good thing. A lower Australian dollar is going to translate to higher cost for imported goods and some of those luxury goods that we've been enjoying over the years with a high Australian dollar. But also taking a step back, thinking about why is the Reserve Bank considering these decisions to cut exchange rates, and it's because the economy generally has a few challenges ahead of it, and the press is quite negative, and all of that's contributing to pretty soft numbers that are coming out in terms of consumer and business confidence.
Yeah, okay. Well, look, we're always going to be watching the markets closely. That's our rate update for April 2015. We'll see you again next month.